All right, good morning, everyone. It is Tuesday, May 31st, 2022 at 8:59 in the morning, and this is my pre-market strategy session. So, let's see, the title of the video here, it's kind of a long one. What is it? It's like, oil's bull flag breakout, then the dollar strength and low volume bear market bounces. Okay, so let's take a look at WTI first. Let's see, where did I put that thing? I'll bring it over here. Here's the dollar. Let me bring WTI up real quick. Yeah, there it is. Now these are the risk ranges. Here's the top end of the risk range is at 119.64, and the bottom end is at 108.1. We're getting pretty close to the point in time when 108.1 won't be seen for quite some time. This is a bull flag, by the way. Let me clean some of this up so it's a little bit easier to see. And and what we have is the breakout. It has broken out. So here's the sort of the pole to the flag, and then here's the general shape, and resolution tends to be to the upside. So let me actually kind of zoom in on this a little bit so it's a little bit easier to see. There we go. All right. And so essentially what we had was this period of consolidation here. Let's see if I can put some sort of like a little bit of a bull flag thing happening here, sort of there to from there to we'll put it there to there. And so yeah, it came down. It hasn't been an easy one to trade. You can see when it started breaking out of its range here, it broke down below it again and stuff, and so it probably shook some people off. You know, after it made this break right here, probably shook some people off when it came back down, really plunged back down. For the foreseeable future, I will be buying oil on red. When there's a dip in oil, in the price of oil, I'll be buying. And look at that volume. This was Friday. No, that's today. That is a big volume confirmation right there. Yep, it's breaking out. And so at any point when you can buy on red, do so. Yeah, it looks like there. So now according to Hedge Eye, here are the ranges, and so you really want to buy closer to the bottom of the range and sell at the top. But when things move like this, they tend to just continue moving, and they'll leave you behind. So, okay. Here's a Fibonacci I put on it a while back. It bumped into the 75% Fibonacci and has pulled back. Now, this is interesting, actually. The 61.8 right here, you can see the 61.8 is the sort of green number right here. It did a really neat move there, which is 0, 61.8, 0 again, 50, 0 again, back to 50, not quite to 0, then past the 50, and now past the 61.8. Very interesting. So, it's bullish. I imagine there'll be 1 or 2 red days coming up soon, some point, and those will be days to buy. All right, let's see. Then the dollar. So the dollar came down, and it actually the risk range was actually moving down a little bit. I started averaging in on the dollar pretty high, so the risk range started back on this day right here. It started hitting the risk range on that day, and I started averaging in on it on this day, and so I've been averaging in this whole way down, And so here it is on its bounce back up, and this is a really strong bounce back to the upside here. So we'll see how it goes. It ought to be doing all right on it. And upcoming here in the future, it's bouncing off the low end of its risk range, and is usually what it does next is head to the high end of the risk range. It's just kind of the way that it works. Let's see, what else was there? Let's see, what did I do with my, there we go, okay. So, dollar strength, yeah, that's the dollar. Oh yeah, and bear market rallies. So let's see if I can pull up volume on, let's go to the risk ranges here. Does it have, yeah, it does. Okay. So, basically this is low volume over here. So over here, see this bar right here? This is high volume. This is a high volume day here on the 18th of March. That's a high volume day. 24th of February, that's a high volume day. The 24th of January, high volume day, right? Bottoming candle. This is actually kind of a little bit of an anomaly, this one right here, but you can see basically along with particular sort of days where prices are going to bottom or reverse, there's a large volume candle to go with it. There's a large volume. What we have here in the past 3 trading days is low volume, low and decreasing volume up days. So sellers are going to come back in. When they do, it's going to be ferocious. So we'll see how it goes. Here in the pre-market, we're down a little bit, like roughly if it opened up right now, it would open up at 0.7% lower than its previous close. That's the E-mini. And you can see it really popped right off the top of its range right there. So looking for probably the next down leg to start, roughly here or the next couple days, and that ought to mean an up move in the dollar. That ought to mean the S&P is coming off the top end of its range. The dollar is coming off of the bottom end of its range at the same time. Now the VIX is still just kind of elevated. I did put this little. You're not supposed to chart the VIX. I mean, you're really so this support line right here that I have in the VIX is baloney, but it's there as a visual, and it's from the close of the 4th of May to the close of the 17th of May. And you can see here last Friday, it plunged right down beneath it, but now here we are opening up above it again, up above this support line. Now, and technically, it's not a support line because it's the VIX. The VIX, it's not an equity. It's just an index, a volatility index. So there's no really there are instruments to buy and sell the VIX, but you can't actually buy and sell the VIX in and of itself. It's sort of like buying and selling the temperature of of a room. You can't really buy temperature necessarily. You can buy the energy that it takes to get to a temperature, but you can't really buy the temperature, right? So okay, the VIX is kind of somewhere the temperature, but anyway, it looks like it's headed up for a bounce. It looks like it's headed up for its next leg up, although it didn't come all the way down to the bottom end of its range. So be it. I'm going to be looking for opportunities to short tech, short the consumer. Where's the XLY? XLY, where did you go? Where did I put the XLY? Why can't I find my XLY? HG, so there we go. Yeah, looking for an opportunity to short the consumer. And then, and actually, you know what? Amazon is really close. Amazon came really close to the top end of its range. So yeah, once Amazon really starts to turn around, XLY will be turning around big time. Okay, everybody, good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.